Hello and welcome everyone to the Payments Canada Summit. My name is Elena Litani and I will be moderating the panel today focused on innovation and trends in financial services and payments. In a moment, I'll introduce the panelists, but first, a reminder to the audience. This is a live session and we want to hear your questions, your comments, and your thoughts. Please post those in the chat. Today, I'm happy to have Matthew Parker Jones from JP Morgan, a global bank that has 200 years of history and a formidable reputation on Wall Street. Welcome, Matthew. Hanna Zaidi from Wealthsimple, a Canadian fintech giant that recently raised $750 million and has $5 billion valuation. Welcome, Hanna. And finally, Steve McPhee from PayBright, which recently been acquired by Affirm. PayBright is Canada's leading provider of installment payments plans for e-commerce and in-store purchases. Welcome, Steve.
Thank you, Elena.
You're welcome. I would love to give an opportunity to Matthew, Hanna, and Steve to share brief introductions about their roles and companies. Matthew, why don't you start?
Absolutely. Thanks, Elena. And thank you to Payments Canada for having us and having this panel today. I'm looking forward to it. Just an amazing group of people we have on here. And Elena, thank you for pulling this together. I'm also amazed at the 140 people participating as well. We will try to do today justice and cover a lot of ground. Very quickly, so about myself. So I work with JP Morgan Chase, as Elena mentioned. We're the world's largest payments bank. I do two things for the bank. I run our Treasury services business here in Canada. So excited to talk about what's going on in Canada and Payments Canada and all the trends, and a lot of innovation happening in the country we're very excited about. I also wear a second hat where I run strategy for North America for our payments business. So try to bring a little bit of a perspective of what we're doing south of the border in things like buy now, pay later. And very keen, to chat with Steve later on and also talk a lot about what we're doing in the crypto space with JP Morgan Coin and blockchain and so forth. So very excited to talk with Hanna as well. So excited for a great panel today. And Elena, thank you again for having JP Morgan on the panel today.
Thank you, Matthew. Steve?
Oh, thank you. Yeah, I'm also excited to be here. So as you mentioned, Steve McPhee, I'm the head of partnerships at PayBright, which is now Affirm Canada. Prior to that, I was at Square for about 5 years. So still relatively new to the world of payments, but look forward to learning more from this panel.
Thank you, Steve. And Hanna?
Hi, everyone. I'm Hanna Zaidi. I'm Director of Regulatory R&D at Wealthsimple, and my focus is largely helping Wealthsimple launch new products. The last 2 years, I've supported the launch of Wealthsimple Crypto, which is Canada's first securities regulated crypto trading platform, Wealthsimple Cash, which is our challenger bank offering, and the P2P product, which is like Venmo, but for Canada. And more to come. So I spent a lot of time on our go-to-market strategy, some of the public policy challenges that we deal with, partnerships, infrastructure, sort of the whole gambit. So really looking forward to the conversation.
Thank you, Hanna. This is very exciting. I'm looking forward to the panel. So as we all know, COVID has accelerated the consumer and business adoption of digital and contactless payments. 59% of consumers have tried at least one new payment method online in the past 12 months. This is amazing statistics. 34% of Canadians report that they do not expect to return to using cash payments in the same extent as pre-COVID era. So I would like to start by posing this question to the panelists. What trends and technologies, in your opinion, are having or will have the greatest impact on financial services and payments? Why don't we start with Steve?
Sure. Thank you. I guess I could probably speak best to my area in the buy now, pay later or point of sale financing space. There's been a lot of change recently in this area, and I foresee a lot of change in this year and next year. As you break down sort of the buy now, pay later point of sale financing space, I sort of look at it in two pieces. There's smaller purchases, which is sort of the newer area that we're seeing a lot of growth in, and then there's the more traditional point of sale financing for larger purchases, whether that's appliances or furniture and those types of things. On the smaller side, it's something that's still relatively new in Canada. This idea of financing or taking a loan for a product that's in the $200 price range, a pair of shoes or a pair of jeans or something, is something relatively new in the market. It took off in Australia maybe 5 years ago, and it's really started taking off in the US as well. Canada, PayBright was one of the first companies to offer these short-term financing type products, but we're seeing a lot more competitors enter the space, with Afterpay entering last year, Sezzle already being here, and a couple of other people entering in that space. So I see that really being an area that continues to grow, the smaller purchases. On the larger side, it's also an interesting changes that are happening right now, where traditional players like Desjardins, who have always sort of dominated the point of sale financing for large tickets, have left the market, and people like Visa are working with people to enter that space as well. So overall, I think it's definitely, there's, point of sale financing has been around for, since the days of, putting something on layaway at Kmart. But we're seeing it really wake up in the last few years, and I think there's going to be a ton of innovation and change in the next couple of years.
Yeah, I agree. It's interesting. I used to live in Israel about 20 years ago, and there was, installment payments were pretty common for people to use back then, but somehow it's kind of died out. And then now we see this boom. I've recently been to US, and pretty much every website has some kind of buy now, pay later, airlines, Airbnb, like rentals, as you said, even H&M, which is like, can, make very small purchases. So really interesting space. Hanna, what do you see?
Yeah, I would take it in a slightly different direction. At Wealthsimple, we've spent a lot of time thinking about crypto and sort of the infrastructure, the related infrastructure that's surrounding it. The technology is in a very, very early stage, and there's a lot of things that are happening in the ecosystem that are hype, and some of it is fads, but there's some really underlying interesting infrastructure and use cases that we're seeing that are emerging, that are quite promising and potentially game changing. And so there's DeFi, there's stable coins. DeFi, for those who aren't familiar, or decentralized finance, is like an experimental form of finance that doesn't rely on central financial intermediaries like brokers, exchanges, banks, and instead utilizes smart contracts on the blockchain. Usually it's Ethereum. And so, DeFi platforms, they allow people to lend or borrow funds from others, speculate on price movements in a range of assets like derivatives, trade crypto, insure against risks, earn interest in like a savings-like account. And some DeFi applications provide like high interest rates, with some providing like triple-digit interest rates, for example, but are really high-risk products. So like, unlike a traditional savings account, a high interest savings account, you can actually lose your money. So it's not really accurate to call it a savings product. It's a risk product. I read a statistic the other day where by October 2020, there was over 11 billion that was deposited through various like centralized DeFi protocols. And then by January 2021, there was about 20 billion that's invested in DeFi, and that was in January. So we've seen an insane amount of growth since then. I don't know what that number looks like anymore, but I'm assuming it's substantially large. So, I think there's a lot of really interesting things that are happening in DeFi. I'm particularly interested in the world of staking, which is like the process of holding or locking in crypto in a target wallet for a specific period of time, and then in exchange for rewards or crypto passive income. And looking at it specifically from the perspective of the client being able to accrue interest on their crypto holdings. And again, like I said earlier, there's a lot of risk associated with something like that. So to be able to offer it to retail clients, there's a lot of, sort of regulatory thinking, risk level thinking that needs to be done in order for consumers to fully understand the product and the risks associated with it. But it's looking pretty promising.
This is indeed very fascinating space, and I haven't been close to it, so I won't ask any intelligent questions, but please, in the audience, people, if you have some questions, don't forget to put it in the chat. Matthew, JP Morgan has done everything, stable coins, real-time payments. Can you tell us a bit more what you guys are seeing? And I think you recently announced you entering UK market as well as a challenger bank.
We are officially a challenger bank in the UK, live with 50 plus countries in real-time payments. JP Morgan stablecoin is out there, been over a year now. So we're doing a lot in the fintech and innovation space, and a lot of the money we're spending is on new tech and innovation. I think that's exciting, right? And I think when we think of a trend, though, and I love the comments Steve made around kind of where we're seeing in the buy now, pay later space. I think what we see as a macro trend is this disaggregation of financial services. And that is breaking apart the various products, and also the breaking apart of what I'll call the distribution layer of the bank and the manufacturing layer of the bank, or the factory from the distribution channels. And it's just going to create more and more different combinations and different types of products, right? And if I take the buy now, pay later piece, right, and it's such an interesting space where you're absolutely right, Elena. We've not had a lot of that in Canada historically. Like the credit line and the payment vehicle were coupled together, right, with a single product, which was a credit card, right? So if you needed to pay for it and credit, you didn't have the funds, right? You bundle those two pieces together. Increasingly, the infrastructure, though, is allowing for this disaggregation of the different parts, right? So I no longer need to use my credit card if I need credit to make a purchase. I can pay by bank, right? I can pay by other different types of vehicles, right? And the infrastructure is allowing those different combinations, right? Same thing, like if I go on kind of Hanna's side of the world around all of these kind of fintechs are getting into the exchange space, right, and creating their own P2P products. I think what's interesting about it is that, like, you're getting these unique models that are coming around where, sometimes it's a fintech supported by a bank, sometimes the bank supporting a fintech, right, and you have these different combinations that are framing out. So I think as we think about, from a JP Morgan side, about where the market's headed, it's increasingly around breaking apart the value chain into different components and saying, well, where can we provide value, and where can others provide value? Who's best in class? And no longer is it kind of, do we have to be the one-stop shop that does everything? But it becomes more around, where can we be best of breed? Where can we go and curate the best partners, right? Some of them partner, some of them buy, right? Sometimes build ourselves, right? But how can we bring the best component parts across the value chain to do something really unique? So I think it's more and more becoming, this idea of fintech versus bank is probably, something that's no longer relevant in our world, right? And this disaggregation is now becoming more around fintech and bank and tech and, right? Who can create these dynamic ecosystems to solve customer problems. I think that's really exciting. And I think that is just going to, when we think about long-term trends, I think those new combinations is what we see in all sorts of facets of the payment space being the long-term way new products are going to be structured.
Yeah, and I actually just want to add to Matthew's point on a few pieces. I think this concept around unbundling the financial infrastructure that typically has been associated with banks and traditional financial institutions. We're moving into this world where, like Matthew said, there's a couple buzzwords that are currently floating around on how to articulate this, but it's, one is like unbundling financial services. The other is like embedded fintech or embedded finance, where this concept that like anybody, not anybody, but like more or less anybody like a Shopify or a Google can offer financial services. And I don't have to be a financial institution to do that. But what are the things that I need? There's a stack of technology and a stack of pipes and a stack of players that can in a modular way allow me to offer these services. We're actually seeing an explosion of this in the US and in other markets where you have players that are offering just a way to do identity verification. You have another set of players that are offering, tooling around dealing with fraud, another that's like cash management. You would then have middle players like regional banks, and then banking as a service technology platforms that layer on top of it to then offer their services to fintechs. And I can opt in and have my own wallet or my own deposit account, or maybe I can access the payment rails. And it's essentially this concept that I think hasn't reached Canada yet, and I'm hoping to see a lot more of, which is being able to focus on the technology and the user experience and the actual innovation aspect of it, rather than having to build things from the ground up and do the really basic building blocks each and every single time, which is a huge barrier in Canada, because you have a lack of the middle players that are willing to offer some of these infrastructure services. But hopefully that's gonna change.
Yeah, I think on that front, Hanna, I think when we think about our strategy, I mean, part of it is how do we become infrastructure providers to fintechs, and how can they become providers for us? I think your Canadian point is well taken, right? I think we are seeing this phenomenon, US, EMEA, right, APAC in particular, who's miles ahead. But I think what's been a bit slower in Canada is the policy piece, right, where there's still a lot of shades of gray around what you can and cannot do. And those shades of gray make it difficult to offer products where you're disassembling, because who's got the liability when things break is not always clear in Canada, which makes it challenging. If you're going to unbundle something and you don't know who's liable when it breaks, makes it, kind of it discourages you from going down that path. So so a lot of the progress that's been done by the Department of Finance with retail payments oversight is kind of a step forward, right? A lot of the things that we're doing is a step forward. But the more clarity that our policymakers can provide, oftentimes people get surprised hearing banks and fintechs say more policy and more bureaucracy is a good thing. But in this case, it is, because having clearly defined rules of the game, right, makes it easier for everybody to know how to play the game, and then makes people more willing to invest into the country.
We started to type. Oh, sorry, Hanna. I was like, we're starting to get into the meat of it. I want to stay back a bit more on the trends before we get into policy, because it's a it's a big discussion for us.
I'll come back to it then.
Yes, please, Hanna. So I was hoping to unpack a bit more on the trends that you all started and mentioned. There is a lot of interesting things happening, and maybe Steve, I haven't heard from you in the last 2 minutes. So maybe from your perspective, you did mention, your company basically taken the retail credit model and made it, very fast, simple, and consumer friendly. So what do you see? What are your predictions, or in the lending space, or maybe buy now, pay later? What do you see?
Yeah, I mean, I guess the one of the overall macro trends that we're seeing is just a movement away from some of the more traditional ways of financing products at the point of sale, which would be a credit card. Younger people are less inclined to necessarily sign up for a credit card and use they now understand some of the downsides that come with running a balance on your credit card, and the amount of interest and the fees and the retroactive interest and things like that will accumulate, have caused people to look for other ways of being more financially responsible than necessarily getting out a bunch of credit cards, as I did when I was in college. But people still need a credit facility sometimes, even if they are mainly using a debit card. And that's where I think things like a buy now, pay later solution that's still very transparent in terms of, yes, you are paying interest on this transaction, but this is how much it's going to be, or no, you're not paying interest, but there'll be a late fee if you don't. We don't charge late fees, but competitors do. So just being very transparent in terms of how things work where in the past, things kind of seemed like you weren't paying anything. If you pay your balance off on time, you weren't paying anything. But if you didn't, then there was always lots of surprises. So I think people are getting a more financially savvy or literate, I guess is the word. And so products that recognize that and allow people to, just understand what's happening with their finances is something that I think we'll see more and more of, whether it's, people like Affirm or whether it's places like Wealthsimple that are, very clear in what you're paying.
And Steve, there is a good question on, relevant question to what you spoke. There's a lot of players now in the space on buy now, pay later. So how do you differentiate in the marketplace? It's becoming very crowded.
Yeah, definitely. It was sort of, as I said, it was sort of a sleepy space that now has become very crowded. There's more and more players. I think right now there's a bit of a land grab going on as people are trying to sign up different merchants and drive the largest number of customers that they can have. I feel in the end, you'll really need quality technology behind what you're doing. At Affirm, that's sort of our belief, is that we are building the best technology company, not necessarily just a marketing tool. And over time, because we're, by focusing on building quality technology, we'll better be able to, underwrite those customers, open it up to more people, maybe people without traditional credit files, or maybe people who wouldn't have qualified in other ways, just because we'll be able to underwrite and have better risk models, better fraud detection models will allow us to drive our pricing down for merchants. So yes, it's definitely a bit of a boom where there's a lot of players, but I think in the end, the ones who have the best technology and the best consumer offering in the end, one that people will pay a late fee once, but the next time they might not be willing to. So someone who has a very transparent, clear product for consumers and is able to build that trust combined with really good technology is probably where we're going to see the winners.
Yeah, and I've seen in US, like there is a company called Snap Finance, and their focus majority was on lending the furniture. So you buy the furniture and you like lease it to pay.
Lease to own. Yep.
Lease to own, right? And they're now thinking about like cars, potentially larger purchases. So I think there is, and definitely businesses would benefit with such capability as well. So I do think there is either vertical or horizontal, potential competition and expansion. So really interesting. I also, there is a good question in the chat, which I actually was part of our potential discussion. And Matthew, I'll start with you on that one. In recent years, blockchain has been hype and then everything became non-hype. But in the meantime, JP Morgan quietly was designing a stable coin and now it's in production. You guys are using it quite effectively. And one of the questions on the chat, which is relevant to the discussion, it seems like either big tech or someone like larger world banks would create some kind of potential stable coin, and something like Amazon could actually have a whole value chain, right, of purchases and paying. How what do you see the future holds with blockchain or stable coins? Is it a hype? Is it a reality?
Yeah, no, it's a great question, right? And I think a lot gets thrown into the blockchain cryptocurrency bucket, right? And I think it's important to kind of break out that umbrella a little bit. We are big believers in blockchain. I think if you've got environments where you need to create trust from parties who don't know one another, multiple parties who don't know one another, it's a really effective technology to solve some of those problems. We've started doing some of that. In fact, most of the Canadian banks are connected to our link network for sharing AML information amongst one another, right? So if you're missing information, right, to expedite and allow a transaction to go through, right, you can use that network to fill it in, so you have trust between the various parties. So some really great use cases to eliminate friction. I think we're big believers in the potential for stablecoin, and we've been doing stuff with JP Morgan Coin, right, from a cross-border standpoint, quite a bit last year, accelerating this year, right? And for certain use cases, we've found it's really, really effective. Is it ready for main stage today? Probably not, but we've learned a lot about how to apply that technology, right, and where there's efficiencies, and that's and that's in the basket with things like real-time payments, with Swift MX and ISO on Swift, with all these different technologies, right? We see a role for coin, and we see it solving certain use cases with tremendous efficiency, right? And it's part of that larger toolkit, right, that we want to be able to provide to our customers, right? As that manufacturing layer, we want to be able to provide the best kind of Swiss Army knife of payment options to fintechs who kind of use our infrastructure, right? And that's kind of how we see our role, is to be able to provide that suite and let clients come to us, and we can work with them. I think on the crypto side of it, I think, and I'll speak for myself, and I won't speak for JP Morgan here. I think personally, I'm still in more of a I think there is a certain amount of exuberance on the crypto side, where things like Dogecoin and so forth, there is a bit of a hype cycle wound into them. I do think there's a role for cryptocurrency, right? I don't think it's something that's a fad that will disappear. It's not a pet rock it's gonna once and done. But I think there needs to be a level of maturity in the space before it becomes more widespread as a method of payment, or even as a security, right? The volatility there, the storage there, the access there, and the controls just aren't there yet. But I think from our side, like, we think both blockchain as well as stablecoins have a role to play in the payments mix, and we see them being really effective, right? Particularly for cross-border payments, as well as eliminating friction that surround the payment. So we continue to double down and invest in that space really aggressively.
Yeah, and there's a couple of things that I want to add to Matthew's point, that I thought that was a good level set explanation. I can give sort of the non-bank fintech take on where stablecoins are at, and where we think I should say, maybe this is more my thoughts than Wealthsimple's, but stablecoins, like, for those that aren't familiar, they're like pegged to fiat money or exchange traded commodities. They're designed to minimize volatility of the price, unlike other cryptos. So people have proposed them as a way to replace fiat. Stablecoins have some interesting use cases, like Matthew mentioned. There's a number of limitations right now, and I think those limitations are getting in the way of mass adoption. Fintechs right now are looking at a way, maybe this is another avenue to access the payment rails, for example, as an alternative to the traditional ones that currently, we feel are sort of gated by the incumbent bank players. And so, I've spent a lot of time exploring the usability and limitations of stablecoins. And right now, if you want to move money around, for example, if you're using like Interact or Visa or MasterCard or exchange, transfer funds, you need a bank in between. And so stablecoins are really good from like the perspective of they're good for foreign exchange. You can use a USD backed coin to convert to another currency at a fraction of the cost. But my biggest challenge with stablecoins right now is the on and off ramps, like any other crypto. How do you convert your fiat into stablecoins? You need to fund your wallet or your account somehow and do that conversion. And the options that are available are the same payment rails that I talked about earlier. You got to use your EFTs or your Interact or your Visa or your MasterCard in Canada. Kind of defeats the purpose, if we're thinking about it as an alternative to the rails. But if there's, other use cases, or, if there's a solution around these things, like some of the things that Matthew is mentioning, for example, then it sounds promising, but I don't think it's right now holds the type of promise that we're hoping for like the non-bank perspective.
Thank you, Hanna. And before we move on of this, deeper dive in the different trends, I was wondering any perspective from you. What is a hype? And if Matthew, I think you touched on it already. And what will stick? Anyone wants to add? Like, I'm curious what your perspective on artificial intelligence, for example. It's been really talked about, like one of the things which are like really going to impact. But
I think with everything, Elena, I think what's fascinating is I think I think all these technologies, crypto, AI, machine learning, right, all of them have elements of really, really potent ideas and benefits, right? And I think what's probably been challenging for whether you're in a bank seat or a fintech seat or a regulator seat, I think one of the biggest challenges is that with all of these technologies, on top of them, there's been a bit of a layer of marketing or a layer of hype that's been attached to all of them. There's a, for cryptos and blockchain, tremendous opportunity to do some really disruptive, interesting things. But then you get the hype cycle that gets attached to it on top of it that kind of distorts what it's supposed to be and kind of takes away from it. And I think you see the same thing with AI, right? The number of times that even, reading, articles on LinkedIn and so forth, where, there's something that's really just an algorithm or really just a formula, or in some cases just an Excel spreadsheet somewhere, and it gets labeled AI. Like, that's not AI, right? But I think, that because of the hype machines attached with each of them, I think it's become really challenging for anybody in a decision-making seat to say, like, what is the actual idea, and what is actually real, who's actually doing something real, and who is doing kind of a marketing project or a vanity project to get the headline, right? And I think, there's a lot of guilt, on all sides, right? Banks, fintechs alike, around these vanity projects, right? Who are doing something in blockchain or doing something in AI, right, for the sake of, rather than actually trying to solve a customer problem, right? And I think that's become just something that's really challenging in the space, which is with all these technology changes, how do you navigate this, and how do you sift out kind of what's real and what's going to make an impact, and what's all marketing jazz. And I think you see that across all these technologies. So I don't know if there's technology per se that this is a fad or this one's going to stick, but I think with all of them, you're going to see elements of that where over time the marketing is going to taper off, right? And the real ideas are going to come through on each of those stacks, each of those themes.
Thank you.
I think it will just be. Sorry, I was just going to add on the AI front. Eventually, you're right. There's a lot of hype around it, but it under the hood, it's going to become something that's basically table stakes for people using, where, in order to drive down costs, increase speeds, like using new tools such as AI are going to become something that we all have to do, because the speed at which things and the cost at which, transactions just to exchange value, which is, essentially what we're doing in payments, are just going to become, remain too great if we're not taking advantage of these new technologies, whether we overhype them now or not. But they're definitely not a fad that's going anywhere.
Yeah. Thank you all. So I think with that, I would like to move to the next portion of discussion, and we are at the Payments Canada Summit, and Payments Canada has been focused on modernizing payment infrastructure for the last several years. And while modernizing payment regulations and infrastructure might sound too technical and boring, maybe, it is actually the most important financial policy initiatives that government can lead. With fintechs and financial institutions have been speaking up on this subject quite extensively. And it all comes together to something that I think all of you have touched a bit upon, and especially Matthew, with your idea of disaggregation of those services, fintech strategies, banking strategy. There's new platforms like banking as a service are evolving. My question is, how do you see banks evolving? And maybe JP Morgan has a different perspective slightly, because you're also global bank in US bank, the fintech strategy, and what are the regulations looks like for the future? It's a big question, so anyone wants to start?
Maybe I'll wade in, and I would love even Hannah's thoughts here. I think I'll take you know, and if I can juxtapose Canada with what I see kind of outside of Canada, I think there's a tremendous opportunity, right? We are real-time payments, right? Enable, you know, which is one of the Payments Canada's pillars, enables a whole series of new use cases, right? On the pay by bank or buy now, pay later side, right? The ability to move that money instantly, right? And remove some of the latent risk in that infrastructure, very attractive, right? If I'm Wealthsimple, right? Instead of taking 2 days to fund my account with an EFT, right? I can fund it instantly, right? So across the board, infrastructure powers new use cases and does some really exciting things, right? And whether that be the speed of the infrastructure, whether that be the data that goes with the infrastructure, so you can do better decision making, whether that be kind of the convenience of that infrastructure, like there's a whole slew of enablers there. I think from a policy side, I think it's important to. It's a challenging time because on one hand, the new infrastructure introduces new risk, but on the other side, it introduces the opportunity for new innovation. And I think one of the big challenges that Payments Canada has and the Department of Finance have is how do you set guardrails on that infrastructure, right? To make sure that you're not setting them so tight that you're limiting innovation, right? But not so loose that you're potentially allowing bad actors or bad outcomes from happening. So if you take something like real-time payments, for instance, money's moving very quickly. It's irrevocable. It's data rich, right? There's data, with that, too loose, you have data privacy risk, you have fraud risk, you have all sorts of elements there. Too tight, right? You're not going to necessarily get all the innovation out of it that you would get from either Steve or Hanna's companies, right? Where they can do some really exciting stuff with that infrastructure, right? So I think that's the big challenge as we're going through this change in Canada is how do we manage the policy framework that surrounds the new infrastructure so that we get the best value as a country. I think probably the good part / bad part of it, if you will, is we are a little bit late to the game in Canada. We are certainly the last of the G20, probably the last of the G40 to have real-time payments. So it's taken us a lot longer, unfortunately, to get to where we need to be. But I think there's a silver lining in that, which is we can go out and we can look at policy frameworks. Our regulators have the opportunity now to speak with their peers at other organizations, at other regulators, to understand what works, what doesn't, right, to try and get kind of the best possible outcome for all Canadians from that infrastructure. And I think that's kind of where I see the big focus right now is the infrastructure is coming, but without the associated policy framework, right, it's, you finalize, I don't think you necessarily know how it's going to play out for Canadian financial institutions and fintechs.
I could add a few points. I think, Matthew, you mentioned earlier, there's this attitude in Canada versus other jurisdictions where we've kind of matured from it in other places where it's like, banks are evil or fintechs are evil, and you have this kind of adversarial relationship between the two. Which, as a fintech, I disagree with, because we're heavily reliant on our bank partners on multiple fronts, but it also makes for a challenging situation, especially at the size and scale that Wealthsimple is becoming, where you're relying on essentially your competitors to then give you access to critical infrastructure that powers your company. And what does that look like from an economics perspective? What does that look like from a user experience perspective? And there's a couple of challenges that are kind of highlighted from that experience, but also more broadly in the ecosystem that we've kind of touched upon already, where there's a lack of middle layer services like banking as a service platforms and players that are willing to power that infrastructure that fintechs are reliant on. And you see this really flourishing in other ecosystems where you have smaller banks or regional players that are looking to diversify their customer base and their services. And so they partner with these technology players to provide those services. That's almost entirely missing in the Canadian market at the end. I think maybe we're at the cusp of some of that changing, but there's additional things that need to change. Like, there needs to be incentive for, banks that have that infrastructure to want to provide those services. And we just don't have enough competition. I'm a little bit sort of skeptical to see if that would happen. And then there's the policy side of things, where I'm going to take a bit of a more critical position and say, there was in 2017, the Competition Bureau indicated a number of barriers for non-bank entities to be able to successfully innovate and stay in the Canadian market. There was, some of the things were like a lack of federal and provincial coordination between the different regulators, and a number of recommendations that were really thoughtfully articulated, and absolutely none of those have actually been implemented. That was almost 4 years ago. So there's a number of challenges from a non-bank perspective that exist in the Canadian market that I've kind of already mentioned, but the fintech sector is reliant on essentially their competitors, some of which might see them as a threat. There's other challenges, and having them adjudicate sort of access is a bit challenging and problematic. I think Paychex Canada has done a good job in articulating why that's problematic, for example, where in the telecom sector, you have the CRTC as a regulator that oversees the adjudication around competitors being able to access critical infrastructure. You don't have that type of oversight that exists in financial services. There's right now, there's a bit too much, there's too much friction that exists with fintech players working with larger incumbents, which discourages consumer choice and the core principles of open banking, which is another policy area that we're working towards.
Yeah. Thank you, Hanna. Thank you, Matthew. I would love to hear from Steve. I mean, buy now, pay later hasn't seen much regulation. What are your thoughts of? But there is starting to be talk about it. So tell us a bit more.
Yeah, sure. I'm definitely not the policy or regulation expert, but I enjoyed hearing Matthew and Hanna's thoughts on that area. I mean, I would say it's not completely true that there's not regulations. There are existing banking regulations, high cost of capital, regulations around interest rates and things like that already exist that apply to our sector. There are, in different provinces, we can apply for or are required to apply for different sorts of licensing. So there are some of the existing regulations that do apply to our sector. I think to the point earlier, I think we welcome anything that helps define or make it a level playing field for everyone. But recognizing that you need to balance that with the ability to innovate, and by adding significant regulatory overhead, then that just naturally disadvantages any smaller companies looking to get into a space, and plays better to a company like a bank that already has an entire compliance department and has people in regulatory departments that can do all of those pieces. So it's a balance if we want to continue to see more innovation, not just in buy now, pay later, but in any sector.
I agree. We've seen that in open banking consultations that, some of the concern is over-regulation, which it might actually be have a negative impact on innovation. So I think that the discussion and leaning towards was a regulation based on risk, as well as consideration of high liability insurance. And that market is completely non-existent really in Canada. But you see it emerging in UK and other jurisdictions where open banking, open finance has been happening. So it's definitely a lot to do, as Hanna and Matthew and all of you pointed out, but it needs to be done in a cautious way that doesn't have the reverse effect of the advancement that we want to make. There were a couple of questions in the chat, and I wanted to address, and one of them is for you, Steve, potentially. So one thing we haven't talked much about the real-time payments, and one of the questions was, do you see buy now, pay later is affecting card volumes? But on a personal level, when I use that product, I often use my, could charge to my credit card, depending on the offering. So I wonder what's your opinion on that, and how is there any impact on the real-time payments here?
Well, cards meaning credit cards, or as it ties to real time.
Probably
payments?
credit cards. Probably credit cards, although it could be debit. The question didn't specify.
Yeah, I mean, I think in the end it will come down to where consumers and merchants will see that they're getting value. Right now, I use my credit card largely because I get points, but then I'll pay off my balance. But I then have 21 days or whatever to pay off that balance, and if I don't, then you run into problems. With a buy now pay later solution, if it's also 0% interest for not just those 21 days of a card, but for a longer period of time, whether that's 6 weeks or in some cases multiple months, people may choose to use a buy now pay later just because there's more value there to them. But you're right, in terms of the repayment, as in how do we get repaid, oftentimes it does come back to a card that's being used, whether it's a Visa debit card or a credit card in some instances. So yeah, in that sense, the cards are definitely not going away, and they still play a role even in the buy now pay later space. But I know in other countries, like I said, where in Australia, where it's a more mature market, you are seeing a significant percentage of people choose a buy now pay later solution. One, on the consumer side, they have more time to pay and they see that benefit and they have no hidden fees or surprises. On the merchant side, oftentimes they're paying an MDR for a credit card versus paying an MDR for a buy now pay later solution, which could drive new traffic to their website. Some of these tools are being used to drive significant amount of traffic and new customers to merchants, and also just offering them the ability to increase their basket size, increase their purchase rate because they know they have a longer period of time to pay it off. So I think in the end, yeah, it will just mean whoever's offering value to the consumer and the merchant will end up getting more market share.
I'd love to get on this one as well, Elena, because I think it's super interesting. We're obviously we're the largest merchant acquirer globally, right? Largest in the US, largest in Europe. It's second largest in Canada, so that we've got a big stake in this game. I think along with buy now pay later, there's this trend towards pay by bank, right? And that's not going away. And I think we are very aware of that from the JP Morgan Chase side. We are actively investing into that, right? Like real-time payments, right, is part of that. Paying by wallet is part of that. And I think, and we recognize that there's a flex between the two, right? And cards work, and there's a lot of benefit of cards, and consumers like cards, right? And there's a lot of benefits to that infrastructure. And I don't think it's an overnight thing, but I think increasingly you're going to see real-time payments blended into that. You're going to see buy now, pay later blended into that. You're going to see new wallets and so forth being blended into that. And the traditional model of an acquirer, right, which is really card-based, right? Increasingly when you're going to service a merchant, it's going to be about multiple endpoints to pay in. And interestingly, it's probably going to be multiple endpoints to pay out as well, right? And it's going to be, no longer is it going to be one or two rails siloed off, right, on each end. It's going to be about many is to many, and it's going to be about making sure that you can be supportive of however your customer wants to pay, right, in a transparent way. Can you give them that variety and make sure that, and so that you can serve them most effectively, right? And I think that's the name of the game. And I do think you're probably going to see, right, if you look at other geographies, right, as real-time payments and as open banking and other changes happen in Canada, you are going to see a shift, right, in terms of the makeup of things. But I don't think cards are going away. They just become another part of a portfolio available to the consumer.
Yeah, I think we would all agree with that. We're almost at the time, so I just wanted to provide a quick summary. We had over 190 participants today. This is really exciting to have so many people tuning in and listening. We were able to still talk about buy now, pay later, AI, unbundling financial infrastructure, stable coins, regulation, lots of topic. But I did wanted to give each of you about 1 to 2 minutes to have some closing thoughts on the topics, on trends, and what do you think coming next? Who wants to start?
I think that I'm happy to start on it because I'm really curious to hear what Steve and Hanna are going to say. Like, because from their seat, it's I think they're seeing the change firsthand, big time, right? But they're on the battlefront, right, of a lot of this change. I think what's interesting and probably the biggest challenge for us in Canada, regardless of where you sit, is going to be talent, right? I think there's so much happening. We're in a period of generational change where not just one new technology, but like a amount of new technologies are coming through, right? You're also going through a demographic change, right? In a lot of banks and fintechs, right, where you have got a bit of a changing of the guard that's happening. And I think you combine those things together, I think it's going to put a tremendous amount of strain on our talent as a country in terms of getting people into the seats that, you know, they need to be in to make the right decisions, right, for Canada's national competitiveness, so that we have the right products, that we have the right companies, we have the right policies, right, so that Canada collectively ends up in the right place. And I think that for me is, you know, if I think of the one thing in this that's kind of that there's no answer to yet, right, it's the talent question, right, which is who's going to do all this work. Because I think I'll certainly speak for ourselves, like the biggest challenge we have is getting, retaining, and attracting top up and coming talent, right? They're so hard to come by, right? And I think that's something that when I speak to other fintechs, other banks, right, I think it's just a common theme. So I think that's the one piece out of this entire equation that makes it all work, the people, but that we still don't really have a great answer for us is how do we get those people?
Thank you, Matthew. Steve?
Yeah, I'll just build on what Matthew said around talent, because it's an interesting topic for sure. Yeah, I mean, Canada and even Toronto specifically has a lot of great talent that, given the number of big banks that we have here, people who have that experience in more traditional banking settings, definitely, I think it's a strength of Canada or Toronto specifically. I think one of the more interesting things will be just as we move out, one of the things that we've learned in COVID is that we don't all need to be in the same location or in the same city. So just looking at how we can tap into talent across the country and even potentially outside of the country to help build these systems and build the infrastructure that we need here, by moving to things that are either remote first or just allow people to be working in other parts of the world, or even the country. So I think yeah, that's an interesting area that I think as we get out of this whole COVID situation will be interesting to see how it unfolds in the next few years, and hopefully to the benefit not just of the payment infrastructure, but of business in Canada in general, just being able to hire people wherever they want to be.
Hanna, do you have some?
Yeah, just maybe taking a different angle and building upon some of the things that we said earlier, and I think in summary, I might be biased because I lead the regulatory strategy for new products, but I think meaningful regulatory change is definitely a key challenge and hurdle, and doing it in a way that's actually going to level the playing field and spur innovation is, I think, one of the things that are probably most topical and top of mind. At the same time, I think the what I've seen at Wealthsimple and companies like Wealthsimple is a lot of ingenuity and resilience. So despite the regulatory landscape, we're gonna keep moving forward and figure out creative ways to do things and to achieve the user experience, and launch the products that we're looking to launch. But obviously, if you have a conducive regulatory environment, then it makes things a lot more easier to do.
Thank you, Hanna. Thank you, Steve. Thank you, Matthew. And thank you, everyone who tuned in and participated and asked questions. It was a pleasure, and enjoy the event. Bye, everyone.